Hey, it's Adrian. No, he's on his listening to his cell phone. No, I still can't hear you.
I like your style, but it would be nice if you were a little less conspicuous. You're definitely my kind of suit. Hey, Sarge, give it that way. I can almost taste that $1 million. You know, I think I'll keep you.
There's only one. It's a cookie. There's only one cookie.
Nothing on earth could do it.
Is it good?
Could it come from the shuttle? Peter Parker. No, wait. How about that guy from Aerosmith? Maybe something more traditional. Something in town.
Bruh.
Whoa.
There you are. Now I can hear you.
Tell me why I had the mic on mute.
Wait. Can you hear me?
Yeah, I can hear you. I'm
Okay,
like,
cool.
oh man. I'm like, we just tested this. It should be perfectly fine. And then as soon as you're like, I can't hear you, I'm like, oh my God. All right, cool. We good. So, we're gonna have price to the right. So we're gonna have the 1 hour and 4 hour to the right, just to have it in our mental that we're still focused on the higher time frame. Even if when we drop down, you want to have something to always kind of remind you to focus on the higher time frame or what price is trying to do in general. So that'll be to the right. Um, so what we want to do now is we want to look at just where price is at right now. I'm gonna say everybody mute up for right now until I break it down, and then just unmute whenever you got questions. Because just like I say, these calls, I'm gonna record them all. That way, you guys can watch them back when it comes to like watching live price action back and seeing how it played out.
Okay. You can't hear me right now then, right?
I can now.
Can you still
I
hear
still
me?
can. Yep,
What about now?
still can.
We can hear your TV and stuff in the background.
There you go. He good now. All right, bet. All right. What's up, Zach? Let's get it.
What's going on?
Not much, man. Time to get to it. All right. So, looking at price coming into to today. Same exact kind of concept that we always look for is expansion and consolidation. So we already see that we have expansion right now off of this high. And this is me coming to the market fresh, just like you guys. I haven't looked at the market. I haven't looked at the market in general just because I want to have fresh eyes when I come to the market. So I'm just trying to simplify where market structure is. And then from there, we base our bias off of what we're seeing. So we go ahead and just mark up that high. And then whenever you marking up highs and lows, look at where the high and low came from. Also mark that up because what that does is remind you that you're probably in a bigger range or the range that you're in general. So what I mean by that is you have this high right here and don't just drag it over until it breaks, like drag it all the way over. And the reason why you're doing that is because you see that this high initially was a break. And then once it broke down, it took out this low before heading back up. So that's why price went for this high. So now the range that you're going to be in as of right now will be this. But price is still developing. We're still to the upside. Market hasn't opened yet. So now with the market about to open, now we're just trying to anticipate how price can play out as it opens. I'm not jumping in the market as soon as it opens. There's no reason to jump in the market as soon as it opens. For what? You want to wait for the market to develop, show you what it wants to show you. Then from there, you go and attack or proceed. So in this case, I'm just waiting to see what the market entails. I can go to a low time frame and kind of make sense of it. Like right now, I will look at this break and then look at kind of this range right here is consolidation. And as price pushes up and then comes back to it, I will look at these two candles as consolidation. But that's from an hourly perspective. So like this, I would look at it like that because the bodies are the ones that tell the story. So if I drop down to a lower time frame, I can see what's going on or transpiring inside of that range right there. But is that my focus as of right now? No. I would rather let price play out because my trades, I like to be in my trade at 6 in the morning and be done before market opens. But now that we're live, I'm saving my trades till market opens. And I don't like trading market open at all. Not after the fact, just initially when it opens, like maybe 5-10 minutes after, then I start to kind of like see what's going on, what the market trying to tell me. But as of right now, this is that same consolidation that I was talking about with those 2-hour candles with the bodies of it. And we see how, if you look at, this is the overall market structure, but on the smaller frame or smaller range, you have basically this high to this low, same high and same low, because they both made swing points, and it's inside of this BISI right here. So then you have this high to this low, then you have this high to this low, to this high, and this low. So the range that you will be in right now will technically be from here to here, but just because of how price is developing, what you want to look at is the wicks and the bodies. So when I'm looking at this swing high right here, you want to look and make sure that this is it is a swing high. So looking at price, so you have 22. Look at the top left hand corner where it says open, high, low, close. This high is 22,576.75 to 576.75. So these two highs are equal. So these are equal highs. So you can look at this as a swing high because this is the first high that was made and price just came right to it. So you can look at this as a swing high. You just don't want it to be above. But technically still above, it would have been a swing high, but these are just equal highs. So me looking at these equal highs in comparison to when price came over, you see that we had that consolidation as we broke above with the body of the candle from these equal highs. So when I'm looking at consolidation on a smaller time frame, now I could look at this consolidation. So if this is a consolidation that I'm looking at as of right now, then that means this imbalance can be in play. But this is just me setting the foundation. I'm not jumping to any conclusions. I'm not chasing a trade right now. Even if I see one right now, that doesn't mean get in. I don't want to be a part of market opening. I'd rather let it play out, do its thing, and then from there, I'll base my trade after the fact. So you have price pushing up. So if I had to look for consolidation, because that's the first thing you want to try to find. Try to find that consolidation that started it all, or that's using it as a continuation. So like, for example, this will be consolidation for continuation. Expansion, consolidated again, expansion, consolidated again. So you see this consolidation, you see how we had this low, you see how price went down and took out that low, but where did it take it out at? Consolidation. So when you're finding those consolidation points, that's just helping you dictate where you're trying to see the market going, more so than where you should take a trade at. You're just trying to get in sync with the market. So now I have two consolidation points, and now I see a range that prices in between this one and this one. So when you're trying to take a trade and it's not breaking out and it's just real rangy, you're like, man, why is it not going anywhere? Boom. And then remember too, you always want to label everything. That way you won't get nothing mixed up. So we got 15 minute. We got 15 minute. Okay. So now we determined that we also have this imbalancing right here that price is sitting at, but you don't want to jump to a conclusion. And time again, you'll tell yourself that you're not until you see a trade or a possibility. You're like, man, I'm going to just take it and see how the market opens with it. You don't want to see how nothing. When you're taking your trade, you want your trade to be the trade you were looking for. And are we seeking this right now? No. Like, you can look and say, okay, well, this high was swept. Then you have basically this imbalance right here. And then that imbalance became an inversion. And then you can look at this as confirmation to the downside. But do you want to entail that that's the trade that you're looking for? This is near market open. We're between two consolidation points. Even though I see that and I can see this imbalance as a confirmation, do I want to take that? No. Could it play out? Yes. But I'm not jumping to a trade and trying to like, okay, I got to take something right now. You don't want to have that mindset, especially at market open. Let's make sure we keep this on a 15-minute. Okay, so we got 3 minutes until market open. So do we have any questions? Anybody want to ask any questions about kind of what we're looking at right now before it opens? Okay. So we just sitting in this consolidation, not really going anywhere yet. Just waiting for price to let us know what it wants to do. Because remember, we're inside of this consolidation, but we just took out this low. So you just want to see how price is going to react when it comes back up, seeking that high. Because if it comes back up and it retests this consolidation, then we can look for expansion to the downside if it fails to do so, which will be playing off of the model. So there's the initial push up. And watch how the candle is printing. And you see, I'm not going down to a lower time frame on purpose. I'm not dropping down to a 5 minute to see what the 5 minute is telling me, or a 3 minute or 1 minute. Like I'm waiting on higher time frame, 15-minute right now, just to see how the candle is playing out. Because if you know how to read the candle and base it off how it's printing, you already know what the lower time frame is doing. Let's see. Once the market opens, we'll drop down to a 5 minute. Then and then kind of see how price transpires. So we have 30 seconds until. And see how we had that rejection off of that imbalance. Let's look at the midpoint of that imbalance as well. And remember, keep your Asian range high and low in mind. Asian range low has not been taken out yet. There's market open. Let's see how we play inside of this consolidation range. Because something I would have looked at initially would have been this wick. And then the midpoint of that wick, which is broken by the bodies of the candles here. So just looking at that price, that would be 22,587.50. So yeah, it was broken already. We had the first retest here, but then the bodies broke below it, but it's bouncing off of that consolidation as well. So just kind of a key area to where things are happening. But this is why you don't want to jump to a conclusion when the market opens, because already you had a mindset of we can have consolidation. Why is that? Because of yesterday and us having that expansion. Then coming into the morning, already see it's inside of a consolidation. And then you found two ranges of consolidation, which prices just going back and forth between. So now when you're trying to get into a trade, and let's say you took a trade and it's not going nowhere quick, it's like, okay, why is it not going nowhere? But you got a lot of resistance. You got two areas in which prices are stuck between. So you want to see some type of breakout of some sort or some sort of momentum down to one side or the other. And then from there, you start to see how the story is unfolding. But this is where the patience part plays out at. So just like how we did yesterday, let me go and deep dive into this part. So let's go full screen, 5 minute, right? So see how we have this imbalance right here. and we see how we have the bodies of the wicks, the bodies in the wick. We have this imbalance right here in the 5 minute, but I'm not looking at the whole imbalance because look how small the 15 minute is in comparison to this 5 minute imbalance. So what I can do with this 5 minute imbalance, instead of marking the whole thing up, I can look at it in quadrants. And I can look at it in 4 pieces and look at how the bodies of the candles are inside of the lower quadrant. And when I'm using quadrants, it's more so just to focus on key areas or levels in which the bodies respect more than anything, because that's what's telling you the story. So you want to see how price is reacting to the midpoint of a wick or the lower quadrant or upper quadrant, because if price was up here somewhere and kind of just sitting up in here, but still was at this imbalance, even though it's sitting there, it's telling me that, okay, that we can potentially go down, but also since we're in the upper quadrant of this 5 minute imbalance, then it probably can continue to the upside if it wanted to, and then probably go and sweep the initial stop loss, then drop down. But as of right now, we're just watching price and how it plays out. So you see how we got that drop off that 5 minute. And remember, I was telling you guys how this was that 15-minute inversion and confirmation, and how we're dropping off of it, and we just target that low. But we're still inside of this range. So don't let this fool you into jumping into something. Like, I gotta get in, I gotta do this. Like, no, like that's where you do this, you do that, and then it looks like moves, that you're getting moves, but you had to deal with this. You want to avoid this. The higher time frame, 15, 5. Zach uses 10. Some people use 12-minute, 30-minute. All those time frames are going to tell you more or less what you want to see, by still giving you a little bit more information than an hour. An hour is kind of clean cut. It's just like, okay, you're either going this way or this way. But when you're looking at the 15-minute, you want it to help you develop the story based off of what you're seeing and how it's trying to portray. Because if you're trying to get in, imagine you get in on the market open, right? And you took that sale, and that sale dropped down, and it's 25 points. And you're used to the market giving you 30, 40, 50 points just a week ago, 60 points. Now you're getting half of that. And I was dealing with this yesterday, just looking at it. This is not a market right now that's giving us those crazy 70, 80, 90 point pushes. So realizing that, but people are equating trading to the news. Like, all this war is going on, all these things are going on, the market should be going super crazy. But the market has been more calmer than usual. So you're not going in looking for these crazy points. Don't focus on the points. That's why the points, you focusing on points will throw you off, because you're always focused on the biggest move. But a big move can be a 30-point move as well. It's all based off of the trade. So you want to know where you're at and why the market is ranging, why it's expanding. Everything is doing something for a reason. You just have to find out why. So how do you avoid days like this? By simply seeing where price is at that moment when you're getting ready to trade, and avoiding the market open. Give it 15 minutes. Let it fizzle out. Whatever it's trying to do, it's going to do it. And then from there, you attack every single time. But is this a clean setup right now? And then, not to mention too, you want to focus on the key fact that if you take this high here and you drag it all the way across, all this is just a sweep. And we still have Asian range low intact. So the only thing that can make you take a trade or entice you to take a trade, besides the market open, the only time I will look at a potential trade at market open is if the risk is minute, is small. So in this case, this initial stop loss is here. So you're looking at about 16 points. And then from that to the low was about 40. So you're getting a 1 or 2, but is that my 1 to 3? And I know I'm in a range of consolidation. So I'd rather wait for it to have a clear path down or up, but not jump to conclusion on just what the market needs to be doing. Because you'll see something like this and like, man, I missed it. Like, no, like you did it right. You seen prices ranging, price didn't want to go anywhere, and you avoided a lot of wicks. Because let's say you were saving your mental capacity for one good trade, and then you had to deal with all of that back and forth. Now when the actual trade comes or actual opportunity comes, you're so already gassed out from dealing with that, then you're not seeing it clearly. And you want to see it clearly as possible. So you wait for things like this. Let the market show you it wants to do something. Don't jump to a conclusion on anything. So now, when you're looking at the 15-minute and you're seeing this push like this happen, what are you thinking? Are you thinking, okay, this is the push down? It can push down, it can go all the way down to here. As price is pushing down, you want to see, does it have any roadblocks that it can potentially run into? You don't have to mark them up. It's more so just seeing, okay, what is price invalidating and validating. So you see we had this huge rejection right here. What is this rejection off of? You got a BISI right here. Now, is this BISI going to hold up? We don't know. That's why you want to wait and see how price reacts to those levels or key levels. But I'm not jumping to conclusion on anything. We're just simply waiting for price and seeing how price is going to play out. Let's go look at the 4 hour while that's cooking. So now we have this 4 hour BISI. With this 4 hour BISI, you see we have this high, right? This high is broken by this body. So now this is a key swing point on the 4 hour. So besides that, what I want to do is look at this same imbalance that I was talking about yesterday. We drag that over. And then we want to look at that in quadrants as well. Because if you think about it, these are 4 hour levels, all 4 of them. So these are levels in which you can see price bounce off of, reject, and just help you out with your bias and how price can play out. So when you're looking at an imbalance, don't look at a higher time frame imbalance as, okay, well, it's just bouncing off of it. No, like look and see how it's doing it, why it's doing it. Okay, is it a 4 hour? Is it a 1 hour? Is it a daily? Why is it doing it? Okay, is there a reason for it? Okay, what is it trying to go to? Because we just broke this consolidation. If this candle closes, then it comes back up, and we start to bounce inside of this consolidation right here, then that could be that continuation to the downside. But if it just rejects all the way back up, and now you're still dealing with this range, then that's a problem because now you're back in the range that you're trying to get out of. So when you're taking your trades, you want to have a clear path. Now, is it okay to take trades like this? Yeah. But you have to know that you're dealing with this. Otherwise, you're going to be like, man, I don't know what it's doing. I don't know why it's doing that. I don't know why it's doing this. Because you're overthinking everything. There's no reason to. Just take it easy. There's no reason to jump the gun on nothing. And then also you see we're bouncing off to the Asia range high. Off of that same imbalance. So keep that right there. Keep that right there. Now, something that you probably didn't look at yet was price. Look at the midpoint of that 4 hour imbalance. That price is 22,498.50. Mid level on price is 22,500. So we're bouncing off a 500 level. So when you're looking at price, you're seeing, okay, we bounced off a 500 level. Price can potentially do something here. And then if you look at where we came from, we just came from 22,575, which is near 22,600. So looking at price through 100 levels, but I look at it quarterly, but you can look at every 100 points. But when you're looking at it as a range in its totality and how price plays out back and forth, you can look at it 22,000, 22,250, 22,500, 22,750, and then 23,000. And then those key levels will tell you where price is bouncing off of, where it's trying to go back and forth at. It doesn't know what it wants to do. Just don't jump to conclusion on anything. Let the market tell you exactly what you need to see. And just simply wait. And it's okay to miss something. You're not jumping to conclude. You got all day. We're just live for the first 2 hours to see how price is going to play out or set up. So, for instance, this will be where 6 o'clock. So 6 o'clock is here. This is when I usually find my trade, around this area. So me seeing prices inside of this BISI on the 15-minute and then looking to push to the upside off of this consolidation. So if I'm not looking for price to go back to the consolidation, I could look for it to go to this high. But I would have to look at the 5-minute and 3-minute and see how it played out to see if I would have took that. But I can't just say like, oh, I would have took that, I would have took that, because I want to see how the candle is printing. That's the biggest part to it. So let's go down to a 5-minute. Let's see what's going on down here. So we have this consolidation here. Price is bouncing off of, and then you see how right here, this push up is a push up, a price leg push up. Right after that, we have consolidation. So this will be the original consolidation after this push. So if I looked at it from this standpoint, then on a 5-minute, this will be my consolidation. This area right here. You see just a bunch of candles. And how can I confirm that this is a key area? Because price here, it pushed out of it, came back up into it, and then broke out. So if I looked at this, that'll be that same level. And this is 5-minute consolidation. So this is when you find that consolidation, it's literally like the turning point for everything, because it's like a base. And then from that base, something's going to happen. Price is going to push up, price is going to push down. And then for consolidation, for me, I like to see my model at consolidation. So I want to see a sweep of a low or high at a consolidation. And then from there, you get that inversion and confirmation. And then boom, just like how it was over here. But the problem with this one is it's at market open. Okay, so we're watching price as of now. So we can any questions when it comes to just what we're looking at so far? Let's see.
Yeah, I got one.
Oh, go ahead. Go ahead.
You said you like to look for the model within the consolidation range, and
So
so
go
like
ahead.
specifically that or above or below.
So let's just do a quick example. So let's say this is my consolidation that I'm looking at that moment. So if I'm looking for a buy, we have the low here. Then that means with this one, if I was looking for the model, I would look for this to be swept. So I would look for price to go break that. And then this would be my price leg right here, inside of here. And then the model would be through here. So then I look for it to push up, do this little thing, inversion confirmation, and then back to the upside. Off of the consolidation.
Okay, gotcha.
Because it's like a base. Because whenever you're looking for the model, you're looking for a sweep. So that sweep is okay, I went that way, I'm done, I need to go the other way. So I'm always looking for the sweep, and then look right here. That was a sweep. Sweep of a high right at the confirmation. But we are looking at it as an imbalance because it's the market open. I'm not touching.
Gotcha.
Cool. So far, what are you seeing? How's it looking to you?
For me,
Mm-hmm.
it's too noisy for me. I think. No, but
That's good though. That's good you
uh,
see that. Because you
I
look
don't
at the
know,
10-minute,
cause
right?
yeah.
Let's look at it. Let's look at the 10-minute. So you
So
see,
like with
all
this,
on wicks.
I'm just. Mm-hmm.
Go ahead.
Oh, no, I'm saying like with this, I would just wait because like any imbalances or anything I would see, like they're too high up from
Mm-hmm.
where price is now.
Mm-hmm.
And so this is how I end up on my sitting on my hands a lot because even if I were looking for it to continue to go up,
Mm-hmm.
like if you do like the range thing or the Fibonacci or whatever, like
Um,
the first imbalance
this one.
closest to where we are now.
Oh, this one.
Yeah, that's so high up, and so
Oh,
I
that's what
would
you're
just
saying. And then
yeah.
too, that's right below me and right above the consolidation. So it would have to break
Hmm.
this, then go into that. Now it can wick into it, and if it wicks into it, and then the bodies of the candles will stay below, and then continue down, that'll be a push down. So like for me, that's when it comes to market open, I'm sitting on my hands a whole lot more. That's why I trade early in the morning when I get to the gym or like 6 o'clock in the morning, because most times that volume is real just steady, but you get better volume at the market open. So it's about just being patient and waiting. And then once your trade plays out, it plays out, because all this is going to do is be expansion. And then once it's done expanding, what it's going to do? Consolidate again. And once it consolidates, you want to see what it took out, why it took it out, and then from there you attack. But it's just a waiting game. But ain't nothing wrong with that. So if you got to sit on your hands, and let's say for the whole week you're used to taking, let's say, one trade a day, and you only take three or two, but what those two are more than you taking five. That's a big possibility. So no, sit on your hands, man. No need to rush it. No need to rush it at all. And that's what I want to come on here and show you guys every single day. Like, we're not gonna rush anything. Can we get on here and take 5 minute trades, 3 minute trades every 15, 20, 30 minutes? Yeah. But for what? That's not what you want to do. That's not you treating it like a business. That's you coming in and just taking trades. Like, you want to be able to come in, see what you need to see, get up out of there, done deal. So the fact that we got all these wicks and all this back and forth coming into the morning, this already is like a hey, just wait. And look at the volume. Like, from the high right now to where we at. That's 80 points. Total range after market open. So if we only 80 points, half of that's only 40. So out of that 40, what do you have to risk per your trade? Now that does help you have a smaller risk because volume is not moving so much. But if you have a mindset of, okay, I just got out of a market to where the market was moving 50 points back and forth so easily, if you don't recognize that quick, then you get stopped out a lot because you're seeing these small risks and you're imagining these huge gains, and it's not going to happen because of the market we're in. So this is more of a cool collective market. It ain't really going nowhere. It ain't trying to do nothing super crazy. So just don't jump the gun.
Gotcha. Yeah, I think my combine started sometime last week, and I
Mm-hmm.
feel like it was moving a lot more. it
Yeah.
it
Oh,
was easier
100%. 100%.
to see the model.
But that's how people get messed up. That's how people get messed up because, especially doing combines, it's like you're not realizing that you're in a live market. It's not like you're taking a test in a random market. You're in a live market. So conditions for taking your test may not be the same as they was last week or yesterday. So when you're coming to take your test, sometimes, like a market like this, for example, for me, I'll be more aggressive in a market like this because it's a lot less movement. And if I wait for the right trade, then it's going to play out smoother. But when you're in a real aggressive market, you got wick back for 50 points here, 70 points there, 60 points there. Like, and I'm trying to do a heavier position, it's too much. So like for a 50K, and I'm trying to catch 25 points in this market, I'll do two contracts because I'm probably gonna risk about 12 points, 12 to 15 points. So 12 to 15 points, that'll put me at about 500 risk for 1,000 point gain. And now you 30% there. So just take it slow. Don't even. What size contract are you doing?
Oh, 1 minute.
Okay, yeah, perfect, perfect. So what has your risk been so far, if you can remember?
Um, so I think last week I was risking 20,
Mm-hmm. Okay, and 20 is a good
20
number.
points. Yeah,
Mm-hmm.
and so typically I kind of stay around that, like risking that, and so even if I guess the midpoint or the bottom of the middle candle
Mm-hmm.
Like I might extend it just a little bit.
Okay. Just to give yourself some cushion.
Yeah.
Perfectly
Yeah. And
fine.
if I get stopped out, I get stopped out. But
Mm-hmm.
um I haven't taken that many trades on this one.
You haven't taken that
Um
many trades, but you're close to passing it. That's a good sign.
yeah. Yeah.
So
So
that tells you something right there. You know what I'm saying? You're taking less trades, but you're closer to passing it. That's a big deal.
yeah, and for now my wins are much bigger than my losses. So
Mm. Oh, that risk management, man, and something you just said that I didn't hear you say a lot before, and I heard you say it yesterday and today. Is like a loss is just a loss. It's a lesson you learn from it. You're not phased by it. It's just it is what it is. It's a part of it. So we're gonna be taking losses on here. We're gonna be taking wins. Like it's a part of it. There's no running from it. So I'm not gonna avoid a trade just to not take a loss. Like that's no. If we see one, we're gonna take it. Now I'm not portraying when to take it and when not to take it, but you're gonna tell that I'm gonna be looking at one as potential.
yeah, also when I'm not super confident, I
Mm-hmm.
just do it paper and see if it plays
Mm.
out.
And that's good. Thomas does that real good when it comes to paper trading. Like that's a big component to helping you out. Like that's something I wish I would have did back then. Like I was all my stuff was live. Everything was live. I didn't believe in paper trading at that time because it's like the how they make it seem as if like, oh, you paper trading, you this, you that. Like, no, like do that because you get your rocks off. If you have an idea, you feel like something can happen, you take that instead. Because now you're preserving your own capital because you're not risking your own capital. And then you can see the trade play out. You still have the mentality of you took it. You still have the price action in your mind of what happened and how you seen it. All that equates to better trading and waiting and being patient and it like, dang, okay, I seen that I should have been patient yesterday. Like yesterday, I took my trade yesterday, and while we was talking, I took it, and trading view was lagging so much. I took a note of that. I told myself today, like I'm not trading on Trader Rate. I mean, not Trader Rate, Trading View today, because when I took it, it was super laggy, and it's been doing that for like the last like week. And I'm like, I don't like that. So I just take my trades back on Trader Vic as I usually do. But even things like that, you want to note take things like that because they play a big part. See, we bounce off this consolidation now. Nice sweep. So this candle hasn't closed yet. So this will create that swing point after we get one more close above it. Okay. So we see this candle close above it, and then that'll give us a swing point. We went and swept this consolidation here. But now remember, this is a 5 minute, but we have a 15 and we have the 15 up here. So price is going back up. But as it's going back up, you want to focus on where consolidation is at. So even though you see this consolidation here that we're coming back to, also this is consolidation as well, right here. So when you start looking for those consolidation points, they start making so much sense. Like, look, I'm gonna draw off. I'm gonna circle a couple of them here. That's consolidation. That's consolidation. This is consolidation. That's consolidation. Oh shoot. So all these consolidation points, when you start looking for them, then when you're anticipating price pushing up, you're not in the dark because you're literally seeing it trying to happen. So all these consolidation points, and then those are points that price is going to come back to every single time. So when it comes to using other tools to try to find where I'm at in price, all I gotta do is find consolidation, and then consolidation is going to be basically where your dealing range is going to be at. So that's why the dealing range is so important. Knowing where your high and your low is. So at this point, like right now, we had this sweep of this low. Well, you want to see what swept the low. So when you look for the push up, this is the high right here that swept this low and it swept that low. So if I looked at it from this standpoint, from high to low, it's showing me that this consolidation is inside of a premium. So as price pushes up, you want to see how price acts in this area right here. And then let's say you were taking something on a smaller time frame, you can look at smaller range. What I mean by that is this right here is a swing high. So price can sweep that and then head right back to the downside on like a 1 minute because of the key area that we're in right now. So all those things add up, but you want to know where you're at and what time frame you marked it up on. Don't jump the gun on anything because you're always going to have consolidation every single time. So let's see how it acts at that little swing high we just talked about right here. And until you see how for me, like personally for me, my chart right now is getting too noisy. Like it's too many. I got too many things marked up, and it's giving me too many decisions to make. Because it's like, oh, we bounced off of here, and then now we're coming here, and then you can see it coming back here. So once I kind of know where I'm at, and that's why I focus on price. Because if you know where you're at in price, then those areas wouldn't matter as much when it comes to looking for the consolidation because you'll know where you're at based on your eyeballs because you'll see it. Like, oh, it's consolidation right here. And it's off of here. And then you can already tell because it bounced off of it here, here, and now we're coming back up into it. And then this is around the 500 level. So now there's the high. Let's see if price rejects it. And watch the body of the candle. That's going to tell you what you need to know. So nice push up. And this is after the break. So whenever you have a high, price breaks it, and then you get this pump in volume, then that's telling you price is trying to seek something else. But if it breaks it, and then it just rejects it real hard, either it's rejecting it to go back up, or it's rejecting it, it stays there, and then we continue back to the downside. But you want to see how the candle is printing and why it's printing like that. So now, once you see it go above here and close above here, you ask yourself, where could it go now? Well, this low was taken out by this high. So now that we have this new low, where could it potentially go? This high right here. And look at the 4 hour. All it was a retest of the 4 hour imbalance. And then it pushed it upside. And look at the 1 hour. You got this super long wick on the 1 hour. So if I take this wick, cut the wick in half, there's that push up. Cut that wick in half. The half mark of this wick on the 1 hour is 22,510. 22,500 level. Right there. Okay. All right. So now we got that rejection. So now with this, initial stop loss is looking to here. That's where it would have been. That's where it would have been earlier. So now you want to see if price does break above that. Are we going to go for that initial stop loss? If you're looking at it as a confirmation. There's that rejection. You don't want to let the lower time frame fool you. Focus on what the higher time frame is doing. And this huge rejection doesn't mean that price is going to just run up. This is showing a big rejection, but this could also be a wick fill too, where price comes back down and fills the whole wick, or at least half of it. We just did take out that high. So from, we say it was like 16 points from there to that initial stop loss. So call it 17 points. And then from the low it just made, that's 88 points. But you want to base it off of what you're seeing, how price is setting up. Do you believe that the 1 hour is going to continue down? Do you believe that the 4 hours is going to continue down? Look at the higher time frame. What is the higher time frame telling you? Because if you're going against the higher time frame, then you're going against the trend. And if you're going to be a counter trend trader, you got to be okay with what comes with it too. And being a counter trend trader could be profitable. It very could be, but thing is you have to be okay with getting stopped out a lot. And as long as your risk is small, it really don't matter. To be honest, it's really about your risk. So remember, we're between these levels once again. So let's pull one of these charts up on the 15-minute. Let's pull the 4 hour up on the 15. Let's look at that. There we go. Keep this on the 15-minute. So keep this one on 5. And like I said, whenever you get your chart become too noisy, just keep whatever time frame you have your stuff on. Like this is a 5-minute, so just keep it on the 5-minute. That way you won't see it on the 15-minute. So current interval and below. So now I can focus on that. And then this says 1 hour. So 1 hour. Wait. From here. Just look at that rejection. Let me go look at my favorite time frame. See what it's doing. Oh, look at that. Look at that. Straight run up off of this consolidation. How lucky is that? Nope, you gotta know where you at, man. And then if you look at it from a model perspective, you have that high there, this price leg here, and then you would have had this inversion there on a 3-minute. I'm gonna take that off. I just want to show you, but 3-minute inversion confirmation, and then 18 points. 18-point stop. You go back to a 5-minute. Just watching how price plays out, man.
Wait, can you do the 3-minute again? So
Yeah.
there's the price work. You see the inversion, and then there's the confirmation.
Mm-hmm.
But like price already went past the price leg and everything. So would that still kind of be valid, or?
Yeah, it will be valid for one reason, and that's because it's still at the high and price hasn't broken above it.
Okay.
So whenever it runs away from it, you're not looking at it like, oh, it's gonna come all the way back up here. But if you give price time and then it gets back up there, then it gives you a reason why. And two, look at this low we had, this high we had, and then price pushed down and took out this low, making it a new low. So if you're looking at market from a market structure standpoint, it needs to come back up to take out this high. So what's at this high? This same inversion and confirmation from this price leg that hasn't been broken above yet. And then this is where it drops down. And then this will be your first sign of, okay, is this going to hold up or is it going to fail? So if this floor doesn't hold up and then it breaks, there's a continuation to the downside. Then you got this consolidation. It breaks that. And then from there, we can continue down. And then the same thing it just did running up, it can run right back down. Or you can look at it as here's a daily range from here to here. And price can just go down to the midpoint, which is that consolidation, and then bounce right back up. So it's all based off perspective and how you're looking at the trade and what are you willing to endure. Because if that was your trade, you took the sale and then your entry is here and your stop loss has to be here, that's at least 21, 22 points. So if you're looking at the low as a target, that's 84 points. So it's a decent push down, but we just came from down there. Even though we just did take out this high, price can retrace into a discount and then push right back up off of this consolidation because the consolidation is slightly out of a discount. And then from there, we also have this imbalance that price can come down and partially fill and go up. So you have a lot of things that's going against price just running right back down and looking at the higher time frame. So this is where you're not jumping the gun on anything. You want stuff that's a lot cleaner, where it's kind of like you'll have a trade to where you see the model and then you look directly to the left of it and there's no imbalances. It's all like everything is overlapping each other. It's like, oh, it's a clean shot down or a clean shot up. This one is not a clean shot up or clean shot down. So it's more roadblocks, if that makes sense. Or do it make sense? Anybody else got questions about it too? Like what? We just sitting here waiting, so. Okay, so there's that imbalance right here. So now you want to look at the imbalance here. And remember too, I don't think you guys remember, in the model, as price pushes up, as it comes out of the confirmation, instead of selling at the confirmation, at the lower high of the confirmation, you can sell after the break of the candle. And your stop loss has to go above the candle, high or low. So that's in the PDF file that you guys got. It's another style of entry for the trade. It's like it's like if you missed it. So you're just looking to see how price is going to drop down.
Can you say that one more time for me?
Which part? Which part?
The other entry, is it?
Oh yeah,
You said
yeah.
it's on the.
So the PDF file. So it's on at the end of the PDF file. It shows you the entry, and you're entering at the low or high of the confirmation. So let's say if it's a sell, you're entering.
Refrigeration certified.
Hold on, let me mute Ronnie. Hold on. Okay, so you're looking at the low or the high of the confirmation. Now, let's say it taps it and it misses it, or you miss it, and then you have a candle that's inside of that confirmation. As soon as price breaks the low of that candle, you can you can sell at that candle, at the low of the candle, and your stop loss will go at the high of the candle. But that's a more riskier trade because you want to be at the confirmation low or high to sell off of there and have your stop loss at the initial stop loss. But if you miss the trade and the candle goes inside of it, you can sell at that low or high of that candle that went inside of it and then it broke out. But that's a more riskier trade because price can go back up and tap that candle high or low. So if you're selling, you want to sell at the candle's low, the whole candle's low, not the body. And if it's buying, then you want to buy it at the candle's high that went inside of that confirmation. I would do that sometimes, but it really depends on the size of the candle. Like let's say if it touches the confirmation and I missed the initial entry and then the candle is probably like a 10-point candle. I'm like, oh, okay, I can put my entry as soon as it breaks it, I can risk it at the low or high of the candle, risk my 10, 12 points, probably plus 3 or 4, just to give it some wiggle room. But I also know that this trade has more potential of being stopped out than if I would have been at my confirmation.
Okay, I think I'm following.
Okay.
So that would be. So if it's a sell, then the high of the candle would be your new stop loss, and you
Yeah,
wouldn't use the prior one. Okay.
yeah. And I can
Right.
I want let me write it down. We can do like a little like I say, I'm back doing full-time teaching, so we can do a seminar or class on just entries with that. So entries with candles.
Congrats.
I appreciate it, man. This is better the class, man. We trying to get this as best as possible, man. So give you guys the best what you call it? I don't know what you even call it. Odds. Yeah, best odds to get it. Let's see. And then look at the 15-minute. Look at that. Nowhere. Just back and forth. But look at that bouncing off that consolidation. And there's that push up again. And then that's that risk. 18 points. We just took out the high. So then something like this too. So you had this wick right here, this initial wick right here, and you had this wick right here. So as price push up and as price push down, you can also look at the midpoint of this wick, because this is the initial wick at first, or the initial high of the wick before these were made. So that price, and you'll see I randomly look at wicks, the midpoint of wicks, to see if it's telling me something. Like in this case, it told me something the first time that price didn't want to go above it because the bodies of the candles are below it, but now the bodies of the candles are above it. So that's one kind of sign like, what are you trying to do? And then sometimes, let's say with this trade, let's say it pushes up and it just runs up and it like stops at this consolidation high, and it's just sitting there. And then this initial stop loss from there is only like 10 points. It's a small risk. I'll take that. And I'm okay with that loss every single time. So let's say the trade was 30 points. I had the risk of 20 points, and it pushes up and it's like close to the initial stop loss. I only have to risk like 5 or 6. I'll take it. Because in my head, I'm like, shoot, this is a no-brainer. I'm only got to risk 10 points. And if it pushes back down and it gives me 30, 40, I just got a 1 to 3 right there. So it's all based off your trade. Like right now, let's say price is pushing up, and then you took the initial sale at the midpoint of this imbalance. And then your initial stop loss is here. You put it right at the initial stop loss. That's 15 points. Just to where it pushed down to, it's already at a 1 to 1. So if it went and took out this low inside of this imbalance, you'd be at almost a 1 to 2. And then if it went back to this consolidation, you'd be at almost a 1 to 3. So it's basically preference on how you want to take your trade. Now, am I doing that all the time? No. It's based off of price, because you see that we just took out this high and it's just consolidating right here. But you still have this imbalance right here that price is bouncing off of, that's just steadily bouncing off of. So you really want to see it break that. Treat this as consolidation. So let me see. This is how it can play out. This is consolidation. This is the imbalance. Price breaks this, makes the consolidation, comes back up into it, fails, and then continues down from this consolidation right here. And you already know that this high was taken out previously. So then that can be the continuation to the downside. Okay. My bad, fellas. Okay, so there's that push up again. Bada bing, bada boom. Ain't no moment to me. Ain't no moment to me. Just watching price and see how price plays out. What's that price? 580.25. And I say lately. And seeing this price push up and down like that, something to keep in mind. It may not play out. The Asia range low has still not been taken out. That's something to keep in mind. Does it come into play as of yet? Probably not. But something to keep in mind. I gotta find some music, man. I'm gonna have music. I'm gonna have music tomorrow for sure. The sound working. OBS is working. So gotta get like a um, background music. No sleepy stuff though. Let's get it. Let's get it. This is and the crazy part about it is this is how you want your market to be. Boring. Slow, boring, nothing really going on. And this is where you can do the most damage. But when it's real fast, it's real aggressive, that's where you get the headaches, you tired of dealing with it, frustration, all that stuff. Something too. I don't know if you guys see it. You had this consolidation right here. Price kind of bounced off of earlier. It's still a tiny one. It's consolidations everywhere. And then you see how we had that right there. So it's everywhere. But when you know how to look for it, you're not using it to say, oh, buy here and sell here. It's like, okay, this is why this is doing that. This is why this is doing that. Okay, that makes sense. Okay, let me wait for this to happen. Everything is just playing out smoothly. You're not jumping to conclusion on nothing just because it's moving. But you also want to pay attention to the right and look at that higher time frame. What's the higher time frame telling you? Because the lower time frame will lead you astray, 100%. Okay, at the consolidation, at the high of it. See how price acts here. Are you going to reject it? Are you going to push up? Look what the 15 minutes telling you. Look what the 1 hour is telling you. This is us just walking it down. Anybody has a secret lab chair? I need to get a secret lab chair. And are they comfortable? You rejected, huh? You're rejecting, huh? Look how it's closing. Midpoint. Body closed above. After the rejection. So let's look how this next candle plays off of that price action in the last 3 minutes. Mm-hmm. 15-minute. We got the midpoint here. We got 5 minutes left till this candle closes. And price is playing inside of this consolidation that it came back to. This is how you want to walk it down every day. Don't jump to conclusion on anything. Make it make sense. Price is always doing something for a reason. You better ask something, Zach? Let's go. 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 And this will annoy you. Why is price not doing nothing? Why is it not doing this? Why is it not doing that? Because it don't want to. So, but the more it sits here and not running down, the more it makes you think that it wants to go up, right? Gotta see, gotta watch and see. And looking at this, looking at that high because that's the high of the price lay that's never got taken out yet. That the inversion is in confirmation is going off of. Come on. Come on, come on, come on, come on, come on. Now I can hear you.
Okay, it doesn't sound like I'm in a tunnel or anything, does it?
A little bit, but you okay? What's going on?
No, because I'm on the road right now. I just finally hit a calm part of I-10.
Oh yeah, you good? Yeah, you good, man. Go ahead. Go ahead.
No, I just I heard your question about the secret lab chairs.
Yeah, yeah. I was asking, are they comfortable?
So I heard that they're comfortable, but from my experience with like a racing chair, or I guess that's what they call them, they're not. I don't know. I feel like they're kind of overinflated, overestimated.
Oh, yeah. I was seeing the price. I'm like, woof. For a chair?
So
That's
yeah,
crazy.
that's what you're doing. Yeah, you're buying a name.
Oh.
Now, with my experience, like I said, I sit for like
Uh-huh.
8 to 10 hours.
Uh-huh.
I just bought like a little like cushion that I sit down. I used to
Uh-huh.
have one for the lumbar, like that. But this seat that I have, bought it on Amazon. I think like 30. I think it was the
Okay.
best thing I've spent. So as
Yeah.
far as like sitting down, I know there's other chairs that you can get.
Uh-huh.
Those are ergonomic.
Yeah, because whew, it's gonna have to get changed
Yeah,
today.
exactly.
I seen one, I'm like, I
And
was seeing the prices of them, I'm like, that's crazy for a chair.
oh yeah, no, they had I think it was like Game of Thrones theme.
Yeah, yo.
Yeah, those are expensive.
It's like 400 or 500 for a chair. It's like more than that.
Yeah. So I'd say probably be better looking up like ergonomic
Uh-huh.
chairs. So I think those would be better. At least you're getting quality film sitting.
Yeah, that's what you want. You want the quality. I don't want the name. I care less. But the name.
No, trust me, that's what I thought.
Uh-huh. Yeah, now you'll take no breaking up. Now it's like going through a tunnel for real.
Oh, okay. Yeah. No, I'm out here in the country going to Kerrville.
Okay. Well, I appreciate the feedback though, Adrian.
All right, no, but I appreciate you guys doing this. Like I said, I'm just watching.
Oh yeah, man. For sure, man. Day by day, you're gonna get better with it. We just learn how to be patient.
Yeah, no, and I know whenever in the future, like once you get it down as far as like the streaming, like yeah, the odds or video, it's
Yeah.
really good. I like that because I can listen to them all night.
Yeah, you just hear it, you just hear it. And then most times like I said, tomorrow or today, I'm gonna try to find some like background music for today. Just to kind of play. So, once we're not doing nothing and then you'll just kind of hear background music, do what you're doing. And then you start hearing me talk again. Like, okay, something's probably going on. Let me look at it real fast. But something there where you can watch on and on again and then kind of watch it back and then have them recorded. That way you can watch it over and over again. There's that push up. There's that push up.
And we've had some.
Your sound breaking up now.
It's all right. I'm gonna go ahead and mute myself.
Okay. Appreciate that, Adrian. Appreciate that. Yeah, man. This is for y'all to see that. Listen, this is not as complicated as you think. You keep it simple. You avoid the crazy, stupid losses. Don't jump in nothing just because it's looks like a good time. Because you don't need to. You want to come to the market and just be careful. That's it. Take your trade and get up out of there. Don't be trying to sit around and trying to, make more than the average bear in one day. Just make what you can and get up out of there. Okay, yes. Okay. What's today? Okay. That's red. Look at that nice push up. Now, price is taking out this high. So you want to see how this candle is going to react if it comes back down to this consolidation. 5 minute. Boom, 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 boom. Now, excuse me. Now you're getting expansion again. Now with this, let's take this off. This is the high that it went and swept at first. So if you look at the hour, it stayed in the same range that swept the high. All we did was come down to this to the Asian range and then push right back up off the midpoint. So when you're looking at the chart, you can keep this on your chart the whole day. You're just watching price as it flows in and out of price or in and out of price legs. And then based off what you're looking for and your setup and your sell or your buy, where are you at? Well, think about it. Right now, we're at a high. So we're at a high and you're looking for a buy. How far are you looking for it to go? Well, if you're looking for a sell when you're at a high, you have to wait for the setup. What time frame are you looking for your setup on? And if it's not there, you don't take it. Simple as that, man. I know we don't. I'm not about to get on here and tell you guys buy, sell, buy, sell, buy, sell, buy, sell. That's not how I go. And I don't know why people be feeding people that, like, taking 15. Like not 15-second chart trades, but just 15-second trades in general. Getting in, getting out, getting in, getting out. Like, that's not trading. You're gonna be able to read price, know why you did it, the reasons for it, and just build off of that. Because it takes one win. That one win turns into 3. You take a loss here and a lesson here and there. They build up, and then over time, boom, you got exactly what you was looking for. So let's zoom into this. Just kind of watch it. That consolidation is key. That huge rejection off of the initial stop loss. But you want to look at the body of the candle and look how the body of the candle closes right at the initial stop loss. Boom, 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 boom. Okay. I'm gonna keep saying it. I need some music. Oh man. I think I got music. Hold on. Do I? No, I don't. No. Give you resume. I'll give you a sneak peek at the 1 minute. Bum, 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 bum. It's a 1 minute though. It's definitely a 1 minute. Got that to take that into consideration. Then you got this tiny little imbalance here. Boom, 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 Had you a little sneak peek there. So you got that playing out. What's happening in the background? Price is bullish though. Price is bullish. 9 points. Can't beat that with a stick. But price is bullish. Definitely have to keep that in mind. So remember I was talking about counter trend trading? That'll be it. But you are at a high. So it's about knowing where you at and if that's a possibility. My chart is getting nasty now. We focus on current price. So we seen that imbalance there. There's also another one on a 3 minute, little tiny one on 3 minute. That price is holding up at. So you just want to see how price is going to hold up at that imbalance. What price is that? That is this low. 22,573. Okay, 22,573. 22,573. So a lot of times too, I got this whiteboard behind me, and I'll put key levels on there. And then like if I'm walking away, or if I'm not here, and I come back and I look at it, I'm like, oh, I written down. I got key levels here. I had key levels here, here, and here. Why was I looking at them? See them after the fact and see, because this is the thing. If you're not taking this information, watching it, and then seeing how it played after the fact and seeing what you've seen different, how you could have seen it better, that's how you want to get better. Well, we just walking it down. So we were able to see how price played out after it opened, seeing the consolidation, seeing how it broke this consolidation back to the downside, see how it came above that wick, pushed to the upside. We've seen this push and how it came back to this imbalance here, broke the high, gave us a continuation. Now looking to see how price is going to act after the high, take out of the high. See how it pushes down, rejects it hard, pushes down, rejects it hard. The candle is telling you what it wants to tell you. You just gotta look at it for what it is and how it's printing. That's why watching the candle print is so important, because the way that it's rejecting, that's telling you something. Just think about it. If it's rejecting super hard, what is it doing on the lower time frame? It's probably a nice spike up really quick. And if it keeps rejecting the same area every single time, what is that? It's probably at some type of consolidation on the lower time frame, just bouncing off of it. Oh man. Ain't a moment till I make it. And I say, lady, and all I knew was over bread. So we came off of that consolidation. We bounced off of it. But now, is it going to trampoline off of it? Is it going to push to the downside and break it for continuation below the consolidation? Gotta wait and see. Let's look at that 1 minute again. Consolidation. Low. Or lows. Inversion confirmation. Down to this imbalance. So that was a 9-point risk. It went about what? So 18 points, 19 points drop. Where is 27 points? And I say lately. Now let me do celebrate. So that's that. So what price is that? 22,555.75. And what's right there? A low. Swing low. Off of a busy. Just keep that right there for safe measures. So look at 3 minute again. We have any imbalance stopping the price from going to the downside? On a 3 minute? On a 5 minute? On a 1 minute we did, but on a 5 minute, 3 minute we don't. Interesting. What was the 15 minute saying? Oh, huge rejection. Ooh, what price is that? Let's say lately. 15 minutes. Let's go back 3 minutes. Low of the consolidation. Ooh. And that thing was close. Look how close it was. Crazy, right? Crazy, crazy, crazy.
Is this where you would look at the midpoint of that 50?
Say it again, Thomas.
Or do you think it should?
Your
Is this
sound
where you
went
would
out.
look at the midpoint?
Let's
Can you hear me
see.
right now?
Now I can hear you. Oh, that wick?
Is this where you would look at the? Yeah,
100%. Yep.
because I think that 1 hour, I mean that 1 minute Sibby's in
So
or near
that's
that midpoint.
15 minute. Yeah. 1 minute. Yep. Bingo, bango. Literally, it's like clockwork, but now it's seeing how it rejects it because you see on the lower time frame, you didn't have. On the higher time frame, like a 5 minute, 3 minute, you don't have nothing stopping it from the downside besides the consolidation. But on 1 minute, you have these imbalances. Not a lot though. So, but you do have that swing low there that was the initial push up off of this BISI that made that high here. So just trying to see how price is going to play out to the downside off of that. Boom, 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 boom. because too, you can't let this consolidation will confuse you. That's why it's important to label it, because you'll see it bounce off of it, and then you expect it to hold up. Let's say if you were buying, and not in this situation, but just in general, if you were looking to buy it and price is pushing up, and you seen it bouncing off this imbalance, and then you buy it, and then it breaks down and it breaks below it, that's because it's a higher time frame imbalance, and you're looking at a 1 minute. So it can treat it way much different than the time frame that it needs to be on. So you want to look at that time frame. So now we swept this low. Price is pushing to the upside, but how far? Because one thing, you had a sweep of this low here, which would be that. But you want to see what high swept that low. So yes, you do have. Pull this up. Yes, you do have this high, but you also have this high, the one that broke the low there. Because right before it pushed down, this was that initial push up, and then it pushed down and swept it. So is it going to take out this high, fall back into that consolidation, and then drop off? Imbalance and then drop off? Is it going to take out the high and continue back up, targeting this high? Let's watch and see. Boom, 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 boom. Boom, ba-da-dum, boom, 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 boom. Man, these spam calls is crazy. Okay. So now all it's doing is just bouncing back off of this wick right here, because it's rebalancing. So this would have been imbalanced. Now it's just rebalancing. So you want to see how it's rebalancing. That's a key thing too. When you're seeing candles being made and you see that initial push up, that candle that's being made next, that candle is either going to make imbalance or rebalance. So this is an immediate rebalance where it comes down, it covers the wick, they overlap, and then now this is balanced. So you want to see how this candle reacts to this candle. And that's just you watching price action as it's developing. Every candle does it. Like I'll give you a quick example while you're waiting. Find a good example, a good one. Okay, like this one. So you had this long wick, and then you had this partial imbalance being made, and then this next candle was made. Well, when this candle is made, once this candle closed and this next candle is made, you can look at this candle's wick and see how price is playing at the wick. So see how it made that candle, came down, broke below it, but then came right back above it, because this was the candle that was trying to create the rebalance or imbalance. So out of those three candles, you focus on the first one and the third one, because the middle candle is going to be imbalanced. So the middle one and the third one are the ones that created. So you want to see how they were responding to each other. It could have came all the way down. It could have went through. The body could go below the midpoint. And that's not saying that you buy or sell it there. It's just more confluence to say, okay, this could potentially go up. This could potentially go down. That's all you're doing every time you're looking at price. You're just trying to make assumptions based on what you're seeing, the data. So now we're just sitting at the high of this consolidation again. Excuse me. I hope this is helping y'all, man. That's all that matters. Come on. Do what you gotta do. Do what you gotta do. And then look at the time too. We got essentially 6 to 5 minutes until 11 o'clock. And what is it doing right now? It's creating consolidation on top of consolidation. But the consolidation that I'm focused on is not this one. It's not even the big one. It's this one right here. Because this is what price is sitting on top of right now. We broke below it, came back above it, and now we're bouncing off of it. So are we going to bounce off of it to push up? Or are we going to break back below it and continue to the downside, sweeping this low? Because this high was just this short-term high was just taken out. Into that hour volume of the candle closing, because we have a 1 hour candle closing right now within 5 minutes. Now you get that volume that starts to run in and gives you that push. So sometimes you could be in the middle of an hour and it's not going anywhere. You're just used to 9:30 and you're giving me volume, but 10:30, 11:30, 12:30, and then if you look at power of the hour, look at every hour and look at it in 15-minute intervals. Look at 15-minute that, like, let's say 8:15 to 8:30, 9:15, 9:30, 10:15, 10:30. Look at that range, and then look how it transpires into the last 30 minutes. So the let's say 10:45 to 11, 11:45 to 12, and so on and so on. But when you are able to look at price like this and find those pockets of consolidation, you see how price is sitting there. You're not saying it's not doing it for no reason, or you're not even relying on imbalances. You're relying on candles, price action to tell you what's going on. The imbalance and all those things should add to your confluences. But when you're looking at pure price action, you're just looking at highs and lows and consolidation. And what phase of the market are you in? Is it expansion, retracement, reversal, or consolidation? And everything starts from consolidation. It's the foundation. And then let's see, something I look at too. Like as I'm watching price, I see that this candle, this candle, and this candle, these 2 wicks are overlapping, but this looked like it should have created imbalance. So I look at the midpoint of that wick and that wick. So if I looked at this one right now, the midpoint of this one, and looked at the bodies, $22,570.50. So all I'm looking at when I look at this is like, okay, if it breaks below it, that could be a possibility that it wants to go to the downside. And notice I'm not saying it's going to go. Possibilities, because I'm just following price action. I'm just seeing what I see in the market and using the tools that the market is giving me. Two minutes left. I haven't even looked at let's look at so look at that 15-minute. Take some of that stuff off. Too much junk on my chart. Look at the rejection. Excuse me. 30 seconds to that candle close. Look at the rejection. Now you got a big push down. Let's see if it rapidly pulls back up. Or does it stay below? Mm-hmm. Mm-hmm. Now you see how the body opened below it? Let's watch how price plays out. Oh, God. Excuse me. This is a new 1 hour candle. This is a very, very slow market. It's hilarious. But it's summertime too. So summertime markets are slow. And then it'll pick back up like tech season. Like I forgot what's that tech event where they have like the new tech. It's like in the fall. Then you'll see the volume start to pick up again. Unless news but we got news now. Market ain't moving nothing. So it's all based on how you see it. Now, how could we have seen this initial push up? Well, this candle right here showed us that it wanted to do that initial push up because of the push down and that immediate rejection right back up. That's the candle telling you something. So I know how to read price. Okay, got a busy here. Remember, this is a selling model. This is a bullish market. This is a counter trend trade. Just beware. So, what does that mean when it comes to trading? If you're counter trend trading, that means you want to see things that should hold price up immediately be broken. You don't want to see like play around in it. because that means price should be aggressive because it's going against the market. So it's going to take a lot to go against the market. Look at that 15 minute to the right. Look what the 1 hour is telling you. Don't let the 1 minute lie to you. This is the time we got off yesterday, but I want to stay on 10 more minutes. Kind of see how this plays out. This is where that BC is. There's another one, so it's one here and one here. So if you're counter trend trading, what does that mean? You don't want to see price come to these and just kind of like, oh, I'm sitting around here. And I kind of break down and sit around here. You want to see boom, boom. But look at all these things you got in the way. It's like trying to move through a cluttered house. You got so much stuff in your way, you can't get through. So it's not, the lower time frame is not as scary as it seems if you know how to look at it from this perspective. But this perspective takes you being able to dissect the market as well. But I think with consolidation, that'll help you tenfold. Just find a consolidation, and then from there, that'll give you help with your dealing range. That'll help with which imbalances to use. Remember, Asian range, high and low, is basically for us consolidation. That's how we look at it. The same exact theory, and that's how we use it. So when I was talking about earlier, I said we had Asian range low, still hasn't been taken out. We still got a whole day. This is just the morning session that we're looking at the market. Market has plenty of market left, but you're waiting for the right opportunity. Remember, this is a counter trend trade. Market right now is bullish. And then you can even look, let's say this is your confirmation. You can even look at that in quadrants. I even, if you want to be very specific about the trade. The body of the candle is telling you the story. You just got to be able to tell what it's trying to tell you. Okay, so we got to push down. Watch how it reacts here. Don't forget, it's a counter trend trade. How's price going to react there? Is it aggressive? Is it playing around with his food? Got some rejection. Nah, this is the 1 minute. Look to the right. Look at that 15 minute. Look how it's pulling back down. Let me zoom in so you can see. Bounce off of the imbalance, huh? Is that a good sign or a bad sign? If price is bullish in general, it's a good sign. But if you're looking at this as a sell, it's a bad sign. So just imagine you was in a sale, right? And you're like, man, I'm gonna take the sale. Okay, cool. and then you see the first two black candles go down to that imbalance, and it bounce off of it, and then you start to see price run back up to your entry. What are you going? You gonna hold on to it, or do you close it? Do you say, you know what, it's not my trade, because that should have been aggressive? Why? Because the market is bullish. I'm looking for a sale. Hasn't happened yet. Now, could it still break the imbalance? Yeah, but it's all based off your risk. If you have a lot of this, is 9-point risk. That's super tiny. If you had, let's say, 25-point risk, 30-point risk, 20-point risk, now it's like, ooh, you want to cut it off as quick as possible. That way you can stop the bleeding and save yourself from just holding on to it and letting it hit the stop loss, which is okay because that's how you want your trades anyway. Once you place your trade, you should already have the risk, in your head. That's already gone. But this is where the patience part plays out at, especially on the 1 minute, because this is supposed to be way quicker than this. There's that push up. There's a midpoint of the wick. Another rejection. But a rejection with an immediate pullback up. If something rejects hard, you want to see it reject hard and then continue down. But if it rejects hard and then goes right back up, I'm telling you, price doesn't know what it wants to do. Ooh. 11 seconds left. 10 seconds left. Let's see how that body closes. Does it close below the midpoint or above it? So 1 minute, don't let it fool you. We're in a bullish market. We're above a 15-minute consolidation. Another rejection. Why does it keep rejecting that midpoint? There's a rebalance because this should have created a BISI, and it didn't. But just because that happened doesn't mean it's going to push down. You want to see. Think about it. If the price is bullish and it wants to be bearish, it needs to be aggressive. Like watching paint dry. Like you see that long wick? You can look at the midpoint of this, but you want to see that it bounced off of something, like this imbalance here. There's that push up. Watch the body. 30 seconds left. They're going for the initial stop loss. Look at the 15-minute. Showing signs of bullishness. There you go. So you're seeing how price is counter trend trading. if you're trying to trade against the market, you're going to have to endure stuff like this. So when you're taking your trade and your trade is playing out, you want your trade to be going the right way. You need to be on the right side of the market. Now, what would have been perfect, we would have had this huge rejection, and then all of this was happening inside of this 15-minute consolidation, and then we could push to the downside for continuation. Just like that. So what I will leave you guys with today, I hope you guys, that helped you a lot when it came to looking at consolidation. We're going to come to the market every single day, being patient and waiting for the right opportunities. Why we just didn't jump in this and take this as an opportunity? This is a 1-minute chart. But we're looking to the right at 15-minute price action. The 15 and 1 minute tell you two different things. So you have to be able to anticipate that based off what you see on the higher time frame. So that's gonna be it for today, man. We're gonna hit the ground running tomorrow as usual. Also, too, we could do. I'll do a quick recap if you guys want. I can go live. What time? I say every time everybody available. That's the thing. I want to go live and do recaps too. So, yeah, we'll do that as well. So, I wish you guys the best of luck. Be patient. Find out consolidation. Let's get it. I'll see you guys tomorrow, man.
All right, I'll see you tomorrow.
All right, my guy.